All right, so welcome to QuickBooks Intermediate with our host, Damon Watkins. Just a quick reminder for this Zoom webinar. Just go ahead and use the raise hand reaction for any Q&A. I will go ahead and unmute you, and then you can ask your questions. Once you ask your first question, it will just keep you unmuted. Feel free to just interject and interrupt Damon with any questions that you have relevant to that particular topic. And just a little bit about the SBDC. We are a national program. We have over 1,000 locations throughout several different states. We partner with various nonprofits and universities to help stimulate economic growth through business development. We offer consulting services, webinars such as this, and workshops to our clients to help them and support small businesses throughout our local community. There is a link here to sign up. We will be sending that out after if you are interested in becoming a client. I highly recommend it because we have really awesome services available at no cost. And just a quick thank you to our sponsors. We are funded by the SBA as well as the California Governor's Office of Business and Economic Development. And I'm going to play a quick video from one of our other sponsors, Maynard Cooper. So I will play that now.
Hi everyone, my name is Jamal Al-Haj and I'm a partner with Maynard Cooper and Gale in the firm's San Francisco office. Maynard Cooper is a full-service law firm of national reach with over 300 lawyers across 11 offices coast to coast. Our San Francisco practice focuses on advising emerging growth companies and venture capital firms, including with respect to equity management, financings, employment, and intellectual property matters. We are extremely proud to be a Founders Circle sponsor amongst an extraordinary circle of other dedicated philanthropists who recognize the immense value that Cal Poly's Center for Innovation and Entrepreneurship bring to the SLO community. We hope that each of you enjoys this upcoming training and workshop and are able to incorporate the knowledge and know-how that will be presented shortly to further help grow, develop, and accelerate your businesses.
All right, great. So I will go ahead and pass the reins over to Damon now. So Damon, you can go ahead and take over.
Fantastic. Thank you very much, Madison. Good afternoon and welcome to QuickBooks Intermediate class. My name is Damon Watkins. I'm the Director of Finance and Operations here at Cal Poly CIE. To start today's class, I believe we currently only have one attendee. So this is going to be a very interactive process, hopefully, from a learning perspective. Traditionally, we do this class in person, specifically relating to intermediate and advanced class. So the class tends to be a little larger. I'm guessing that this class will actually run a little shorter, being as there's so few individuals that are currently joining us today. So with that said, if you have any questions as I go through this particular process with you, please don't hesitate to stop and ask along the way. Being, again, this is such a small class, I can really identify any issues you may have or answer any questions and or concerns relating to QuickBooks. Just a little bit of perspective on QuickBooks and where we're going to start from. I do 3 different classes relating to QuickBooks. I've been doing this for just over 21 years now. I do an introduction class to QuickBooks, which basically walks everyone through the process of getting QuickBooks installed, setting up QuickBooks, setting up your chart of accounts, your vendors, and linking your bank accounts. This intermediate class is a step on from that. I'm going to walk you through things like entering invoices, paying bills, managing your bank accounts. Any questions relating to this as we proceed through, again, I'd like to highlight the fact that please stop me so we can answer those questions. A lot of what we walk through today, there's building blocks behind it. So if you don't have a core understanding of the topic that I'm talking about, it's really hard to move forward with some of the other items that I will start to address. With that said, I always like to start at the very beginning when it comes to QuickBooks Online. The reason for this is one of the things that I tend to come across in this process in going from the beginner's class to the intermediate class is which version of QuickBooks is best for me. And today we're going to be mostly talking about QuickBooks Online, though the material that I am going to be presenting to you correlates directly with QuickBooks Desktop as well. With that said, one of the questions that tends to come up is what is the difference between QuickBooks Online and QuickBooks Desktop, and which one is best for me? Well, the answer to that question is what is best suited to your business. With that said, I tend to find that as people proceed through utilizing QuickBooks and get a little bit more advanced in their knowledge base, they tend to migrate back to QuickBooks Desktops in some cases. There are a few reasons for this. Though QuickBooks Online is a great ERP reporting system, it is limited in certain areas, specifically from a reporting perspective. So if you do see a situation in the future where you'll be utilizing a lot of cash flow reporting and forecasting reporting, the ability to customize this reporting within the QuickBooks Desktop side is a lot more versatile than the QuickBooks Online side. Now, that's not to say that QuickBooks Online does not have these abilities. They most certainly do. And there are a number of resources within the reporting module that you'll be able to utilize to generate a number of different reports, whether it's anything from accounts payable to accounts receivable, payroll, cash flows, inventory, and so on and so forth. With that said, again, the desktop version just tends to be a little bit more versatile and robust when it comes to these specific scenarios. With that said, if you ever have any questions relating to this, don't hesitate to reach out or contact me directly, and we can schedule a sit-down meeting and go over this as a one-on-one meeting. Now, with that said, let me just give you a little bit of background on my experience with QuickBooks, both desktops and online. And the reason I do this is I want to emphasize the scalability of QuickBooks. A lot of companies or a lot of individuals have this perspective that QuickBooks is only used for a small business operations. And while QuickBooks Online in particular is geared towards this specific area, QuickBooks in general is extremely versatile and can be used from a number of different business sectors and is very scalable. One of the best examples I like to use is I've worked with a number of companies where it relates to a 3-person mom and pop shop all the way up to running a very large corporation and running basically their entire finance department utilizing QuickBooks. An example of this is I used to work for a company called REC Solar, which is a local company based here in San Luis Obispo. When I was brought on board, they had actually just done a split with Sunrun. And they basically brought me on 2 days after they had done the split and said, well, we have no ERP system and we need to be up running in about 3 weeks. The point being that we were able to run an 800-person company who was operating a construction business in 18 different states through QuickBooks Desktop for almost 2 years. And the point behind this, again, is the sheer scalability and effectiveness of QuickBooks in doing it. Now, obviously, it's not ideal to run a business of that size with that many people through QuickBooks, but the point I'm trying to make, again, is the versatility and the scalability of QuickBooks. As your business grows, do please keep this in mind. With that said, one of the things I do like to just go over at the very beginning of this is the packages that are offered on QuickBooks Online. Generally speaking, you can start out with the most basic package, which is the Simple Starter, which enables you to have one user. The second level up from that is the Essential package, which enables you to have 3 users. And then there's the Plus package, which enables you to have 5 users. Now, the nice part about this is this, again, can be upgraded as you start to utilize QuickBooks more and more, or you start to use a bookkeeper to help you keep track of your finances. And again, you can upgrade these packages at any time. And all this information is referenced at quickbooks.intuit.com global/pricing. Now, with that said, moving forward, one of the things I am going to touch on today is a number of different areas. Again, since there's only one individual on the line, if there's any specific field that you'd like me to take a look at, please don't hesitate to raise your hand and ask the question. At the end of this, I will be sending out 2 different study guides that I have utilized in the past to be very effective in helping people get QuickBooks up and running and then take that next step into the intermediate level. Any questions relating to that, again, with the SBDC's assistance, we can gladly set you up to do a one-on-one appointment to go over things like budgets, forecasting, and just to ensure that you have your QuickBooks set up correctly. One of the things that I do like to emphasize at this point is it is imperative that you have taken the time to get QuickBooks set up correctly, established your chart of accounts, and ensured that both your vendors and your customers are set up correctly within QuickBooks. The reason for this is, as with many traditional ERP reporting systems, it's a garbage in, garbage out scenario. So if you haven't taken the time to really make sure that everything is set up correctly in regards to your business, then it's going to be very hard to take that next step in utilizing QuickBooks effectively. Now, one of the topics I'd like to touch on just briefly before we start to get into everything is the chart of accounts. The chart of accounts in many ways is the engine that drives QuickBooks from a financial reporting perspective. So ensuring that you have your chart of accounts set up correctly is imperative. And one bit of advice I like to hand out at this point in time is one of the things that QuickBooks does is it will give you a default chart of accounts. This lists about 33 different chart of account line items that most essential business will utilize to track their financial reporting. Now, moving forward from there, one of the mistakes that is commonly seen within QuickBooks is that people take too much time and put too much effort into building out their chart of accounts. Well, what do you mean, Damon? You just said it's important. Yes, it's very important, but one of the mistakes that's made from a core level perspective within QuickBooks is people try to put too much into QuickBooks chart of accounts. And what I mean by that is every single line item that possibly could be entered into the chart of accounts is entered in the thought that as the company grows, you already have this in place. While this may seem effective at the beginning when you're trying to set it up, once you start utilizing the QuickBook reporting, forecasting, and vendor setup, you tend to find that it makes life a lot more difficult because you are establishing line items within the chart of accounts that you might not simply use at this point in time. So keep your chart of accounts concise to the items that you specifically are looking to track. If there are items in the chart of accounts that you do not think you'll be using, do not delete them. Simply deactivate them from the chart of accounts so you're only viewing the relevant ones that are specific to your business. With that said, take the time to customize the chart of accounts out and build it so it's structured towards your company's needs and the specific financial reporting that you are looking for. We will spend a little bit of time today going over these specific line items and how they can relate to the reporting side of the world. With that said, let's take our next step forward. Okay, so I'm going to start at the beginning of QuickBooks Online and the initial sign-in process. I'm not going to spend too much time on this slide because I'm assuming at this point in time that you've got QuickBooks set up on your system. Your chart of accounts is established like we talked about a little earlier. So with that said, let's jump into the dashboard. Now, one of the points I'd like to highlight in regards to the dashboard with QuickBooks Online is it's a customizable page. This page will demonstrate all the relevant information relating to your specific business and where your business is at currently. Now, from this page, you can customize it to report your AP, your AR, to show your cash flow, to show your bank balances, and to track monthly expenses. You can also customize this page to show you past due invoices, invoices that are due or coming up, and thus it enables you to keep your arms around your cash flow scenario. One of the key aspects whenever talking about QuickBooks and a small business is managing the cash flow side of things. Why is this so important? Well, there's a number of reasons that it's important, but most importantly, your cash flow is what dictates keeping the lights on, keeping the doors open, and paying your employees, and helping you grow your company as you move forward. This lets you know exactly where you are at from both a financial perspective and when you're forecasting for future scenarios, whether it be large events or looking to grow your company or improve infrastructure. So take the time to really customize the dashboards to what your needs are. Now, each different business sector can relate differently to what you will be presenting on the dashboard, but taking the time to really customize it and getting a snapshot each morning when you come in and take a look at QuickBooks will serve you well. This will also point you in the right direction to know what are the things that you should be addressing. Now, before we move forward on this, I'd like to take a little bit of time and talk about cash flow within QuickBooks. Nothing will shut a business down faster than the lack of understanding or managing the cash flow side of QuickBooks.
Damon, we've got
This
a
can
quick
be
question from someone, if that's okay. Denise, you are
absolutely.
unmuted, so go ahead and ask your question for Damon.
Okay, I just have an S corporation broker property manager that wants me to help her set up her QuickBooks desktop accounts. And she would
Okay.
manage like 10 plus different properties for 10 plus different clients, or, 10 clients, whatever.
Mhm.
So I don't know exactly how she could tie the income and the expenses to each property.
Sure. So Denise, great question. So the answer to your question right there is we would set these different properties up as projects within QuickBooks Desktop. Now, by setting them up as projects within, you could track each income line separate by the specific project or property that we are talking about. Now, the key to this, though, is setting the projects up themselves separate from anything else that's taking place in QuickBooks. And I would suggest in this particular case, if there's more than one property, to take the time to set up an appointment with either myself or one of the SBDC consultants to walk you through this process if you have never done it before. The other option is for us to do a Zoom meeting where we can basically take the time to set this up through a step-by-step process. Now, can you give me a little bit of an idea of what kind of structure this company has? You did mention it was an S corp, but are these rental properties? Is it a lease? What kind of scenario are we looking at from a real estate perspective with these properties?
It would probably be a rental property, which she would manage in the hopes that, if the owner wanted to sell, that he would use her as a broker to sell the property for them.
Okay, so these would be rental properties. There'd be 10 properties, and each month we would have rent basically coming in for these properties. We want to track things like overhead expenses associated with these specific properties. Is that correct?
Correct. Like maintenance, repairs, rental.
Absolutely.
Yeah.
Well, so the good news in this regard is I'm really glad to hear that you're using QuickBooks Desktop. Though QuickBooks Online is a versatile ERP reporting system, the desktop is a lot more customizable. And in specific to doing projects like this, where you're tracking multiple projects and multiple properties with those income lines, overhead and expenses, you'll be able to drill down on a specific property, right? And do the forecasting that we just talked about. So as an example, if a property A is an example and you come in on Monday morning, you want to be able to see exactly where that property, how many invoices do you have outstanding? How many invoices need to be paid? What is the cash flow associated with that particular property? Is there payroll and salary that will be associated with these properties as well, would be my next question.
See, it sounds like there would be, but, and then the other piece is she would manage a brokerage firm in this S corporation and have real estate agents working under her, so.
Okay, so the brokerage firm would have these agents underneath that we would be paying for services rendered. What would those services be? Things like trying to rent the property out or managing it? Again, just so I can have a better idea, would these be W-2 or 1099 employees that we would be talking about?
Well, I'm not sure, but I mean, brokers or real estate agents get paid a commission at closing. And so then if she had somebody helping her with these, doing the accounting, invoicing, or getting the repairman or whatever for the rental properties, then maybe she would have to W-2 those people or something, I'm not really sure yet. What would you recommend?
So, well, if they are, it depends on how they're structured within the system itself. If they are under what's known as an independent contractor, then it would be a scenario where they simply would be paid their commission. They would get a 1099 at the end of the year via the invoice system. As such, they would not run through payroll. But if they are actually employees of the business, we would pay them through payroll and have the withholdings associated with it, at which point at the end of the year, they would get a W-2. So there's two sides to this. I would need to understand what the structure would be for these agents that she would be working with, and conversely speaking, understand what that structure would look like, i.e., are they direct employees or are they independent contractor? And the reason I bring that up is it can impact from a financial reporting perspective how we go about setting up QuickBooks. Now, this doesn't impact how we go about structuring and managing the properties in each of these 10 different locations, because what we can do is we can create each location as if it was its own little business entity. Within those business entities, we could track all the relevant expenses associated with that property. This would go from everything from overhead to general maintenance to general cost control perspective. So things like repairs, maintenance, travel, anything else that's associated with that specific property.
Would that be under each project then?
That is correct. That is correct. And the reason for this, Denise, is that way you would be able to basically run any P&L reporting against each specific property. And this in turn would give you a clear picture of how each property is doing. Now, the nice part about this is that you could then, if you're running these individual brokerage individuals through either payroll or the 1099, you would cost share those associated expenses with each property. And the example I would give you is you might have an agent that's working with more than one property. And so you would want to divvy up the time associated from an expense standpoint to hit each of those specific properties. So an example in this case would be property A, he spent, let's say 10 hours a week on property A, he spent 10 hours on property B, and he spent 20 hours on property C. You would want to track those expenses associated with those specific locations separately so that they would be incurring the expense. And conversely speaking, when you run a P&L report, you would be able to see that breakout at that level. This would also enable you to track specific budget and line items that we would structure within each of these properties. So we could do things like running budgets versus actual scenario, which is a great way to keep control of your cash flow and, conversely speaking, your overhead. Is that something along the lines of what you're looking for?
Yes. Plus, I was just wondering, would you invoice your tenants each month for their rent that's due that month? You would?
Yes. Yeah.
Okay.
Yeah, I would. So the way I would structure it, and I'm going to just ask some general questions here so I can wrap my mind around this. So each property, I'm assuming, has more than one rental. So whether it be an apartment or an office, whatever that structure is, we would set up line items for each one of those under the property itself. So property A, let's say, has 10 offices that we're renting out each month. We would set up each of those tenants within QuickBooks. And the nice part about this is once you have them set up, QuickBooks can automatically invoice these clients for you if QuickBooks knows what the monthly rental amount is. So you don't even have to necessarily go in and generate the invoice. QuickBooks will automatically generate the invoice for you. Most invoices these days are done through the email system. So it's simply a matter of the system generating the invoice and emailing it to the address on record. The system would then prompt you to say, what are the terms associated with this invoice? Let's say, in this case, let's say, being as it's a rental, it has, let's say, a net 5 terms. So we would invoice the customer, 5 days before the end of the month. They would know that their rent is due by the 1st. Those invoices would be paid. The nice part about that is the system would then keep track of those payments for you. So as you went into each one of the properties, let's say on the 2nd of the month, you would know which properties have paid, or which offices or apartments have paid and which ones have not. This in turn would help you manage your cash flow by property. Now, the nice part about this is not only could you drill down individually by property and apartment/office, but you could also get an overall perspective of all the locations combined together to give you an annual forecast from both a cash flow perspective and from a financial overhead perspective. Because what tends to happen in these scenarios is you start to get key points of information that will come out of the system by structuring them this way. And what I mean by that is certain properties may incur more expenses and other locations may incur less expenses, which obviously has an impact on your cash flow, right? And so what starts to happen is you're able to identify which properties are being more profitable for you and which are being less profitable for you. And in turn, the system can then calculate what your margins are associated with the property, which helps you from a forecasting perspective. The nice part about this as well is that you can build a budget for each one of these different locations to track your budgets against actuals, which is a fantastic tool to maintain or stay on top of your cash flow. Because obviously when you're managing that many properties, that can become a concern, is managing the individual cash flow scenarios at each of these separate locations.
Okay, thank you.
You're welcome. Let me ask you, Denise, since it's just you and I on the line, how much experience do you have with QuickBooks?
Well, you know, just off and on I've used it, but for simple businesses. And then recently I'm doing bookkeeping for this lady, QuickBooks Online. And so that's been challenging. And that's about it. I have more experience in tax than actual accounting.
Okay, well, and just so you know, I do a QuickBooks Advanced class towards the end of the year that specifically relates to taxes, the filings, how to accrue correctly, and how to do the necessary reporting. But as I walk through this today, subject matter wise, you know, prompt me with questions that you have relating to this. The one thing I'm going to recommend right now, Denise, is that we set up an appointment for me to have a one-on-one with you to get a better idea of the structure with this company, and or set up a meeting with the actual brokerage itself to see how we can go about setting this up correctly. Because one of the key aspects of this, and I touched on the slide before this, is before we enter any data into QuickBooks, one of the most important aspects is making sure that everything is set up correctly and that things are tracking correctly within them. Because when you're dealing with a project on the scale of what you're talking about right now, it's imperative that each one of these different locations is set up correctly. Because if they're not, it's going to be that garbage in, garbage out scenario that I talked about a little earlier, where you may be putting the information into the system, but unless the system is capturing it correctly, the reporting that you're going to be doing later on is going to be very difficult. The other part about this that can get really difficult if it's not set up correctly is the banking side of things. You know, most payments these days are done through either an electronic method or a check method. And so if each of these locations is set up individually, but as an example, we only have one bank account that it hits, it's really, really important that we have the structure in QuickBooks set up correctly so that the banking side of it knows exactly which property to post these payments against. And so, again, taking the time to ensure that each property is set up correctly and making sure that the banking link between QuickBooks and the online system is set up correctly. Because otherwise what tends to happen is you basically create this large slush fund at the bank, but QuickBooks does not know where to post the receivables that are coming in. It has no problem dealing with the expenses going out because you're cutting those payments directly out of QuickBooks, and it can correlate those expenses via the category and thus reduce the balance at the bank. It gets a little bit more difficult when you have those payments hitting the bank and then correlating them to the different locations, right? Because I'm guessing in most cases when you deal with multiple locations like this, there's different rates associated with different locations. And as such, you know, you may come in the next day and find that you've got, you know, a $10,000 payment sitting at your bank, and QuickBooks is letting you know, but you have no idea which property or which invoices those specific payments need to tie back to. And so making sure that those links are set up correctly, and most importantly, the structure behind that to ensure that you're crediting those payments correctly to the correct location is key. Otherwise, when you go to do your reporting, when you go to run your AP and your AR, you're going to find that your cash flow scenario is going to be completely thrown off. And that is key when you're trying to manage it from a cash flow perspective. And I emphasize cash flow because, you know, especially from a reporting perspective, that can be key for your profit and loss reporting side of things. So obviously, if you have more expenses going out than cash coming in, things aren't going to work out well. And I've seen many a scenario where people have gone ahead and set up multiple projects in the manner that you're talking about, but because they haven't taken the time to structure them correctly, 6 months down the line, they come to me with, oh my gosh, how do I unwind this massive spider web that I created for myself? So taking the time to make sure that you have that structure. Have you ever dealt with multiple projects on this level in QuickBooks?
No, I have not.
Okay.
I have a friend who handles like 8 different restaurants, and she uses QuickBooks Desktop. So she has, but I have not. And plus, this lady that wants to start this S corporation brokerage / property management, but she said she only wants to use one trust bank account.
Ooh, okay. So that does make it complicated for all the reasons I just stated, but it's not undoable. The key to this part is, and you don't mind if I take this time to really just address some of your concerns and what have you without proceeding through the slide deck right now. I will get to it, but I do find, since you're the only person on the line with us today, that I really like to answer some of these questions, and then I can move forward with the slide deck if you're okay with that.
Sure. I love it. Thank you. I really appreciate it.
Oh, you're welcome. So first of all, you came to the right place. This is what we do here, right? We're all about supporting the local business in our community here. And helping them grow to be successful, which in turn helps our local community. And so this is exactly what the SBDC is for. So the key to this aspect is, if you're going to only use one account, is how we structure these projects, right? And what we can do is, one of the things that's kind of unique to QuickBooks is when a payment posts to the bank account, the bank account will actually have what's known as a credit memo line, right? Which means you have the payment come in and there's a memo that's associated with the invoice that was sent out. Now, the key to this part is that using a sequential invoice numbering system within QuickBooks, because as we build each project out and give it a title, the system will, once we go to invoice either the tenants, the renters, whoever it may be, there's a specific designation behind each property. So what I mean by that is, let's say we have a property in Grover Beach, let's say we have a property in Pismo Beach, and let's say we have a property in SLO. We can use a designation at the end of each invoice number to designate the specific property. This would then carry over in the memo line, so that once the payment hit the bank, you would see the payment dollar amount plus the memo line. Now, the reason for this, then, it would make it a lot easier to associate that payment, because it would say, i.e., invoice number 123 SLO. And you would know right away that that invoice number relates to the SLO property. So you might have invoice number 234 and GR, which would, again, post in the memo line and show up at the bank when the payment is made. Now, the nice part about QuickBooks Online is that you can do direct payment systems, meaning that if you have a vendor set up, right, or a customer set up directly within QuickBooks, you can actually link the payment system that they're utilizing, whether it be a credit card, a bank account, checking account, so on and so forth. And the nice part about this is that QuickBooks will actually do this for you. The only exception to this is when you're using checks, where someone is paying with a check, in which case you would receive the check in, you would post the payment against QuickBooks, and then you would go do the deposit at the bank. So these are just some of the small things that we can do when we do the setup of these projects to streamline the process. But as you can tell by me walking you through this, the key aspect is the setup. So ensuring that each project with each tenant / renter / whoever it may be is set up correctly and those accounts are linked. The nice part about this is, once that's done for the very first time, the system will automatically for you reconcile the payment and the invoice after you've done the very first payment. It'll know that this particular card is paying for this specific customer each month. And so as the payment posts at the bank, you'll come in the next day and go into banking and see that we've got a payment for $5,000. It's associated with invoice 123 SLO, and the system will simply ask you to confirm. What's nice about this then is that your bank balances in QuickBooks Online will always be correlating directly to what your cash bank account balance is. And more importantly, when you go to reconcile it at the end of the month, all those transactions will align. The key aspect of this, though, is to daily be checking your banking system and ensuring that the correlation between the deposit taking place at the bank and the invoices that are being paid are reconciled almost on a daily basis, especially as it relates towards the end of the month and the beginning of the month when you know those payments are going to be posting. Does that make sense?
Yeah, it does. I'm not
Okay.
sure. Maybe my friend would want to meet with you, so you can explain this to her, because she really doesn't know anything about accounting, and I don't know who's going to do her accounting, but I know this is what she wants to set up and how she would like it to work. So,
okay.
Yeah.
Well, fantastic. Is she local, Denise?
Yes. In Paso Robles.
Fantastic. Okay. Well, the good news is we did just open up an office in Paso Robles. My recommendation to her would be to sign up as an SBDC client. Madison touched on this at the beginning of this particular workshop. And once she signed up, we would be able to set up an appointment with me or one of the consultants to actually meet with you in person and walk you through this process and basically hold your hand through the entire process to ensure that it is set up correctly. The other part about this that is really, once it is set up, making sure that she stays on top of it. So getting herself either a really good bookkeeper or a really good accountant to help her walk her through this process, at least until she got to the point where she felt comfortable doing it herself. Now, depending on the size and the scale of the operation, that may involve her keeping that accountant on. But really, to be quite honest with you, it's money well spent when it comes to making sure that you are tracking these things effectively. I can't tell you how many times I've been pulled into scenarios where somebody is trying to do exactly what you were talking about, has given it their best effort, but through a lack of either knowledge or understanding, they've built this huge spider web for themselves. And then basically they come to me and ask me to figure it out. And unfortunately, it takes me 2 to 3 weeks to deep dive on 9 months worth of work and realign everything before it's done. And again, I'll reiterate what I've said at least 3 times in the last 43 minutes. Getting QuickBooks set up correctly is the most important part of making sure that you have a successful company and that the ERP system you're utilizing is effective in tracking both the expense and the cash flow. Because as soon as you don't wrap your arms around that, nothing will close your doors faster. And an example I'll give you in this particular scenario is one of the things that you'll be doing each Monday, it sounds like, and I recommend this being done every Monday once QuickBooks is set up, is you're going to be in a scenario where you're going to be invoicing your tenants/renters once a month. And again, we can get QuickBooks set up to do that automatically, but you're going to be getting expenses that are going to be coming in almost every day, right? Whether it be an invoice from a vendor that you're working with or a maintenance invoice, and ensuring that those specific expenses are hitting the correct property and in turn being paid out at the correct timeline is imperative. Because as with anything in this world, those vendors are going to be reporting on your business, and there's a credit level that's associated with it. And so managing that cash flow from cash coming in and paying bills out, including things like overhead and salary and any other additional expenses that we could be talking about, it's imperative that that is set up correctly within QuickBooks so that we are tracking at it at the line item level. This in turn will help you wrap your arms around the budget perspective that you need to. And that's the next part that we would need to talk about. Once we have all these separate locations built out and set up correctly, we want to align a budget with each of those locations. Excuse me?
Oh, I'm sorry. I'm talking to somebody right this second.
Oh, no
sorry.
problem.
Yeah, one big box outside your team.
Okay. Thank you. Thank you, Damon. Okay,
Oh,
bye.
you're
I'm free.
you're welcome. So, Denise, what I'm going to do right now is just jump into things like, and again, since you're really the only one on the line, give me an idea of areas that you would like me to touch on today. AP, AR, managing users, cash flow reporting, AR reporting, AP reporting, things like that, that I can spend some time just getting you more familiar with. But I think one of the things we're discovering through this conversation that we're having is really we do need to have a sit down and spend some time going over this one-on-one. We are located at downtown SLO. We're right above Ross. I'd love to schedule an appointment once you sign up to be an SBDC client to really walk your friend through this process.
Well, I think I'm already signed up, but she's not.
Awesome.
So I just
Okay.
don't know how to schedule an appointment.
Well,
But
it's
you
actually
can-
really easy, and what I can do is after this, I will follow up with you. I have your email address from when you signed up, and I'll be sending out this document that you're currently looking at on the screen. And then from there, we can get your friend signed up and schedule a meeting with me at the downtown office. I'll have Madison walk you through that process. It's very, very simple. And once again, my time is paid for by the SBDC. It's tied to a grant at the state level to help local businesses. This is what we do here. I do work for Cal Poly, but I allocate a percentage of my time to assist small businesses in this area that are having these difficulties. Again, one of the great joys in getting to do what I do is not only getting to work with students at Cal Poly, but assisting small businesses like yours and like your friends to help them grow and be successful. Because to be quite honest with you, Denise, small business is the lifeblood of our small community. And it's one of the great privileges that we have to live in such a great place, but also have a great community supporting them. And so I'm a big believer in giving back in that regard. And, the SBDC is the vehicle by which I can do that. So I would love to set up an appointment with you. Once we're done with this and I send you the email with everything that I'm going to go over today, I'd love to take that next step, and I'll have Madison work with you to set up an appointment so we can sit down for an hour and get an outline of what your friend really needs. I think it would probably serve us well to have both of you there if you feel comfortable with that. That way I can get a better idea of what kind of structure your friend's looking at. Again, I know you mentioned an S-Corp, but I'd like to get more information on the properties. I'd like to have a better understanding of what kind of expenses she's going to be dealing with each month. And then we'll probably need to dig into the agent/brokerage individuals that you'll be dealing with and decide how we want to manage that from either a 1099 perspective / independent contractor or a W-2, i.e. an employee of the business. Because obviously, depending on how those are structured within QuickBooks, it impacts how we go about doing our reporting. Now, the nice part about all of this is QuickBooks can handle both sides. So if they're an independent contractor, they're simply set up as a vendor within the system. They invoice us, they either invoice us or we generate a commission-based system, which basically accounts for however we have set that particular individual up. So as an example, if they get a percentage commission based on the total amount of sales that they've had for that month, we can set that up on an individual level for them within QuickBooks. Or if they're a commission-based employee, then we can structure that as well. The key parts of that, again, much like what we talked about on the other side by tracking the properties, it's all in how we go about setting it up within QuickBooks. And so I'd like to have a better idea of how your friend is proposing to go about that. Obviously, the difference between the two is simply the individual himself, if he is being 1099, is responsible for doing all the reporting and the tax payments associated with the income that he's generated. Whereby if we're W-2ing, the business itself is taking care of that for him. So again, that is definitely one of the key aspects that we would want to look at when setting this particular individual up. Again, I would definitely recommend using QuickBooks Desktop in this regard. It's a lot more versatile, and especially from a reporting perspective, it's a lot more versatile to customize the reporting to what your needs are. Again, being able to track each.
Let me
Go ahead.
ask you, since you're talking about reporting, I had a property managed by a property manager, and she would send me, a spreadsheet at the end of every year that showed all the income and expenses that the property manager paid, and deducted from my rental income. And then she'd always also send me a 1099 for the rental income. I don't know if
Okay.
QuickBooks can do that. Can it?
It can. Yes, it can. Absolutely. Yeah. In fact, it specifically speaking to this scenario, it's ideally set up to deal with something like this. I mean, really, she should be sending you a P&L report, not an Excel spreadsheet. With that said, she might be doing a data dump, Denise, where she's simply dumping the data out of QuickBooks and into an Excel sheet, which QuickBooks can do as well. But ideally, you'd really want to see a P&L associated with the property, because it would really give you a key breakdown of each line item, both from a revenue perspective and an expense perspective. And this way you're really able to wrap your arms around things like your operating costs and overhead associated with that particular property, which really is where the information that you want to have on hand. If she's simply giving you expenses and revenue at the high level, it's not going to give you the granular detail. And what I mean by that is a lot of expenses can be swallowed up very quickly by things like maintenance, just even general maintenance. And it may relate to just a specific line item within a property. Let's say rental properties that I've dealt with in the past tend to have a lot of maintenance associated with things like pools, general operations, general maintenance relating to things like landscaping, property upkeep. And so those are the kind of things you really want to track from an expense standpoint closely, because nothing will blow your budget up like a consistent problem that's only being addressed really from a high level. So you have a leaky pool, and each month you have the pool guy come out and try to fix the leak. And each month he's coming and doing the same thing, but it's not solving the problem. Well, if you have a budget line item associated with it, when we generate that P&L, you're going to be able to see, well, wait a minute, we budgeted $15,000, but I spent $22,000 on this line item. What's going on? And so having that granular detail basically within the P&L so that you can clearly see where the expenses are hitting and tracking that against your overall budget is really the best way to wrap your arms around it. Does that make sense?
Yeah, sure does. Yeah, I just had to Google, when I own my own property, I would just Google what the average, expenses per property were, like what percentage, and they'd say like, oh, $2,000 a year, for average expenses on a rental property. Oh, another thing, like I was telling her, oh, I wouldn't make myself responsible for the mortgage payment and the real estate taxes and the HOA, what's your position on that? Because I would pay that myself on my property. And so this property manager would only have to do the maintenance basically.
Well, and so again, QuickBooks does have the ability to accrue at that level. And actually the desktop has a really good tax reporting system. The key to that is setting it up correctly so it's accruing by each property, right? So whatever associated tax liability that you have, you want to make sure that you're accruing it at the location level. So each different property, you want to make sure that you're accruing that correctly. And the way to go about that is to set it up correctly within QuickBooks so that when you're invoicing the customer directly, whatever that tax liability that's associated with this specific invoice is accruing. The nice part about that is the system will prompt you to let you know that you have an accrued tax liability that you need to make a payment on. Now, depending on the size of that accrual would dictate the frequency with which you need to pay. There's some businesses that need to pay monthly, quarterly, semi-annually, and annually. Now, depending on the size of the operation, this is where a really good CPA comes into play. If you are in a scenario where you're only doing, let's say, semi-annually or annually, it's kind of ideal to have a CPA that you can simply give an accountant's copy of QuickBooks to, which is really nice in both QuickBooks and desktop, is you can actually give the accountant access to QuickBooks, and this is known as an accountant's access. And what it enables them to do is go in and pull the necessary information to validate it before you go ahead and make that payment. And I'd like to just circle back. Really, you touched on this just a little bit earlier when you talked about expenses. I can't emphasize this enough. One of the biggest mistakes I see, and this is really specific to rental properties, is not tracking the expenses correctly. And why this is so important, and specifically relates to the P&L that we just talked about, is from a revenue perspective, your offset on your revenue line item is your expenses. And so thus, if you are not capturing all the expenses for each one of these properties from a line item perspective, guess what you're going to end up doing? You're going to end up paying more taxes than you need to, which is the best way to not be profitable, is end up having to pay more taxes because you did not track those expenses by location at those individual line item levels. And so this is a common mistake that I do see with rental properties, is that not all of those expenses are being captured correctly. And when I mean expenses, I'm talking about everything that relates to operating that location. You know, don't take it the wrong way, Denise, but you met with me today to go over QuickBooks so that you could work on this specific project. That's an expense against one of these locations, or an expense against all of them. And tracking that correctly, tracking your mileage, tracking your interaction with any other vendor/customers that are out there is key. And a lot of the time it doesn't take place. The only expenses that tend to be tracked are the invoices or bills that come in the front door. Those are not the only expenses that really need to be taken into account. Time and effort is a component of the expense side of things. So whether it's you doing the operation of actually entering the bills into the system, the amount of time you spend working on all these properties, these are expenses from a labor perspective that should be associated with each one of these properties, not just the expense of the agents or the bills that you're paying. And this sometimes is lost on individuals when they go about setting up each one of these properties. So this is where a budget comes into play, where we can not only set the properties up and have it set up correctly to be tracking correctly, but then we can enter a budget in it, which will track against your P&L, and in turn will enable you to do the correct reporting, accruing taxes correctly. All these kinds of necessary items that you need to do to be generating a profit at the end of the year, which at the end of the day is the most important aspect from a business perspective.
Well, Damon, what if the rental income does not cover all the expenses, say the mortgage payment and the taxes or whatever? So you're in a negative position and you need a cash inflow from the owner, I guess. I don't know what you
do. Well, yeah, and first of all, it's a great question. The question at hand would be, if this is an S Corp, and let's just make this simple. Let's say that we have 5 different locations under this S Corp, right? And 3 of the locations are profitable and generate a positive cash flow each month. And 2 of these properties have a negative cash flow. How do we manage that? Well, it does get a little tricky, and part of the reason that it gets tricky is for the statement that you made at the beginning of this conversation, whereby it's one bank account from a cash flow perspective that is then going out to 5 different properties. Now, one of the things you can do is utilize the other properties' cash to infuse into the other properties. Now, this is something that you can do, but you want to be really careful how you go about doing it, because your options are kind of limited. Other than the owner of the property making a capital injection into the business, you have a capital loss taking place with those businesses or those locations that don't have a positive cash flow. But more importantly, if they are set up correctly, you need to identify why you're having an issue with the negative cash flow scenario. Could it be that you're either not renting the apartment/offices for a high enough rental to overcome basically what you're looking at from an overhead perspective? And this is where a budget that we actually enter for each property would be key. Because if you know, Denise, that you need to have a certain level of income each month to cover that overhead, and that, as an example, 50% of the properties at that location are not occupied, well, then you're going to be incurring a negative cash flow situation, which nothing will close your doors faster than having a negative cash flow situation, as you well know, because once you run out of money, there's no paying the bills, there's no paying people at that point in time. Now, you do want to be really, really careful here, because one of the mistakes that companies or businesses do make is they'll have 3 locations that are profitable, 2 locations that are not profitable, and all they do is keep siphoning cash off the profitable locations to the non-profitable locations. And that is not an ideal situation. More importantly, you want to identify why these specific locations are not being profitable. And that can go back to a number of reasons. Overhead is too high, maintenance is too high, infrastructure expenses are too high, and really identifying what those are to address that concern, as opposed to draining the profitable locations into what basically is a cash black hole for these properties that have a negative cash flow.
Well, that brings up another thought. Like, for instance, actually, my friend who's the broker and the property manager, her income is very small. She would like take 10% of the gross rent, for her income, and then pay the expenses, and then the rest would be the owner distribution. That's how it was done for me. But I paid for the property in cash. There was no mortgage on it. But there was real estate taxes and HOA, but she didn't pay that. So, so she's going to have to go ahead.
Yeah, I was just going to say, those are all business expenses that we should be associating with the property. I mean, if you're paying an HOA expense, you should be tracking it. I guess the one concern I would have is if she's doing a specific percentage of the gross each month. That's really going to skew your cash flow, because depending on if it's a good month or a bad month, the percentage that she's taken is going to significantly impact how she manages that cash flow. I mean, a far better scenario would be to have a fixed salary associated with that specific individual, and then maybe incorporate a bonus system into that if that's what she's looking for, because it would make the cash flow scenario more streamlined. Right now, if it's just a percentage of the gross, you may have a great month, in which case she's taking 10% of a great month. But if you have a bad month, she's still taking that percentage out, but it's not the same dollar amount, which could impact the cash flow scenario. And again, it all depends on how you structured but at least if you had a salary in place for this particular individual, you would have a fixed cost associated with that person as you move forward. Now, if your occupancy level was above a certain point, you could then pay out a bonus based on a certain occupancy level or maintaining a certain occupancy level. But to take a percentage of the gross when maybe you only have 1 tenant in the building as opposed to 10 tenants in the building can seriously have a financial impact on managing that cash flow.
Well, yeah. So I think, that's just the way that my property manager did it. She would just, every month she would take out her 10% or whatever and pay any maintenance expenses that month that she got a bill for. And then she would distribute the rest to me. So that's why she used Appfolio property management software.
Which I've worked with in the past before. Okay, that's good to know. I'm definitely going to recommend, Denise, that after this, that we set up a time in the next couple of weeks to meet and sit down so I can dive into this a little more, only because I really would want to have a better understanding of exactly what's taking place with this specific business. I do have quite a bit of experience in dealing with rental properties and structuring and then setting them up. So that absolutely would be something I can do. With that said, I did notice that we've had our other individual join us, so I'm actually going to start working my way through these slides here.
Sure.
Again, very nice talking to you. If you have any more questions as we proceed, please don't hesitate to put up your hand or ask away, and then I will follow up at the end of this so that we can set up that appointment for you.
Okay, thanks, Karen.
You're very welcome. Hi, Karen. Thank you for joining us. I apologize if you got pulled into that conversation. Denise was the only person on the line initially, so kind of was doing a bit of a one-on-one session with her. With that said, I just done a basic overview of QuickBooks Online, spoke about how effective it is, and basically now I'm going to take that next step in regards to just going through some intermediate items relating to QuickBooks Online and the structure behind it. If you have any questions for me, please don't hesitate to raise your hand. The next topic I'd like to touch on really briefly is how to administer QuickBooks and the different levels within QuickBooks from a control standpoint. So one of the things I do, new message, let me just take a look at this real quick. Sounds great. Okay, great. So one of the control points within QuickBooks that's really, really nice, and this specifically relates more to the accounts payable and the accounts receivable side of things, is the level that you can designate an individual within your company. So as I spoke about a little earlier, you can have up to 5 users within QuickBooks Online. You can have multi-user mode, which means you can actually all be in the system at the same time, working on different items. You cannot have the same item or customer open at the same time. This is one of the redundancies that's built into the system to stop multiple levels of information being correlated together. So if one person is working within one customer, the other individual cannot go in and enter any information until the other person leaves. Now, one of the ways that you can administer a control points behind these is setting up different levels of users, right? So the most common is the standard user. And I'm hoping you guys can all see the slide on my screen right now. Now, the standard user is the most basic level of access that's provided within QuickBooks. Excuse me, this most basic level of access that is provided within QuickBooks. This person may have access to all of the QuickBooks features, or you can limit access. Now, when I was running a department on a large construction company, this is where I would specify that my AP individuals only had access to the AP side of the world, or my AR, my accounts receivable, would only have access to the receivable side of things. I would only give the analyst access to the reporting features within the GL itself. Take the time to make sure that you're setting up your employees correctly. You certainly don't want employees looking in areas and looking at information that they should not or probably are not privy to. We're a little inquisitive, but this is certainly one of the abilities that QuickBooks has, is to administer these control points, as I like to call them, to ensure that people are only looking at the relevant information. A great example of this would be when I just mentioned accounts payable and accounts receivable. You probably don't need to give those people access to, let's say, payroll, or access to the agents and/or brokers that you may be working with and paying commission to. So again, taking the time to set up to set up users is key here. And again, the standard user is the most basic level. You can basically limit access to everything from customers to sales to supplies to purchases. And so take the time to make sure that if you do have multiple users within QuickBooks, that you're setting them up correctly. The next level up from that is obviously the administrator. And if you're a master administrator, you have complete access to everything within QuickBooks. Lastly, but not leastly, you do have these three other sections that relate to the administrative side of things. You have time and tracking only, which is where a user can log in and they can see a special version of their timesheet to do their time reporting. You do also have the ability to give them reporting access as well. Specifically, the reporting access relates to people that employ agents or possibly deal with commissions, where a specific individual would like to run a report on all the sales that they've done for the month. You can give them specific access to all of the reporting that relates specifically to them. And then lastly, but not leastly, is the accountant user, which I referenced a little earlier on. So the account user basically has full access to everything on the system. The nice part about the accountant's user access is that from a reporting, specifically a tax reporting perspective, they are able to pull down all the necessary information from your QuickBooks to manage your reporting. Again, if QuickBooks is set up correctly, it's going to accrue your tax liability for you, whether it's on a city, county, or state level. It'll make it far easier for your CPA to manage that reporting and the frequency behind that reporting by having this access. Take the time to make sure this is set up correctly. Again, if you have any questions or concerns in regards to this, please, reach out to one of our QuickBooks consultants so we can set up a meeting and go over with you in a little bit more detail. Karen, I don't know if you heard this at the beginning. I'll reemphasize this now. All the material I will be going over today, I will be sending out in an email after this. These are guides that I've either worked with or used or worked with Intuit directly to help create or manage small businesses for both QuickBooks Online and QuickBooks Desktops. I find these guides to be the easiest way to pass the information out to individuals. And it's nice to know at the end of this, you don't have to take notes, you don't have to write anything down, because I will provide you a copy of pretty much everything that you will see today. Moving on from there, the next slide that we're taking a look at basically is walking you through the process of setting up these accesses, the user accesses that I just went over. I'm not going to spend too much time on these slides. It is pretty rudimentary. The process that QuickBooks use, it walks you through each specific step by step to ascertain what level of access these particular users want to have. Again, if you're a really small company and you're the only individual dealing with QuickBooks, this is not something you need to worry about. But as your company grows and you might bring on a bookkeeper, or you may bring on an accounts payable or an accounts receivable individual, this is where you are going to want to spend the time and ensure these are set up correctly. Okay, I'm going to skip multi-currency. QuickBooks does have the ability to deal with multi-currency. I most commonly see this being used by people like wineries that are shipping wines overseas. There's very few other businesses unless you're an import-export. So I'm not going to touch on this too much. Again, if you do have specific questions relating to multi-currency, just put your hand up and I can spend a little bit more time talking about it. One of the nice aspects of both QuickBooks Desktop and QuickBooks Online is the ability to import information. Now, this is really nice, especially if you've used another ERP system in the past, instead of having to sit there and manually input all that data. And this relates to everything from bank accounts to chart of accounts to customer lists, vendor lists. One of the biggest hurdles that you tend to have to overcome within QuickBooks as your company grows is data error input. Now, for every keystroke that is placed on a keyboard relating to data being entered in QuickBooks, there is about a 0.3% deviation when it comes to errors being entered in there. So imagining that you're migrating over from a different ERP system and you have to enter, 300 customers. And invariably along the line, there's going to be a keystroke error. Something's going to be placed incorrectly. By importing that data into the system directly, you mitigate that possibility. And I'm a big believer in the least amount of physical data entry that can be applied to these scenarios for that simple manner. It invariably, when you're entering that sheer amount of data into the system, there are errors that can occur. So if you can do a data import, it's far more faster and effective. And what might take a person, a week to do from a data input perspective can be done in a couple of minutes if it's set up correctly. The other part of this that's nice is once that data input is set up correctly, you can go ahead and input additional data at any point that you want to. So this is great for things like old bank accounts where you want to make sure that you're pulling the necessary data in. Or you may have used a different ERP system in the past that has all your customers and suppliers in. Instead of spending all the time inputting that information, you can simply pull it directly in. Do take the time to get yourself familiar with this if you haven't in the past. I'm a big believer in using the data import system, and QuickBooks is really, really good at doing it once it's set up correctly. I'm not going to spend too much time on the customer import perspective. Like I just touched on, if you do have further questions relating to this specifically, I can walk you through the process. It's a really simple process. If you can do a data dump into an Excel spreadsheet, then you have the ability to pull that data basically directly into QuickBooks. Conversely speaking, it works the other way too. QuickBooks does have the ability to push out a CSV file, i.e. an Excel file, and export the information out as well as importing the information in. Let's touch on products and services within QuickBooks. So we talked about the imperative of setting up and having the structure behind your chart of accounts being set up correctly. The next big item that really needs to be set up correctly for you to be tracking against it is the products and service side. So this relates to any kind of physical item that you're either selling or services that you are providing to your customers. Making sure that you are going in and setting these up individually so that the system can track against both it from a physical item perspective and a service size item perspective is key here. Taking the time to make sure that if you are running, let's say, a manufacturing or you produce something that you're going to sell, making sure that each one of those core items is set up correctly within QuickBooks with the cost that it costs you to purchase it. Right? And then the resale value when you sell that product in its entirety. The nice part about this is then QuickBooks will automatically calculate out the margins associated with that particular product. This is nice when you start doing more advanced reporting and you can see which products you have a greater margin on, thus making you more money, and which products you have a lesser margin on, which are not as profitable. This is also key in keeping track of your overall cost of goods sales. So what it costs you to produce that particular item, and then what you're selling it to a specific company, business, or entity for. Conversely speaking, the service side of things is really important as well. Oh, Denise raised her hand. Love it, Denise. Go right ahead. I think she's muted. Let's see if we can unmute her.
Okay, I have that friend, that that handles the 11 restaurants, and of course, there's a lot of cost of goods sold for that. So she said, a lot of products purchased, any and used. So she said that she just counts for everything as cost of goods sold, and then does an inventory once a week or once a month or whatever, and adjusts her inventory. What do you think about that?
So this is a restaurant we're talking about, right?
Yeah, 8 of them.
Okay. It's not the most effective way to be capturing all those associated expenses. Now, one of the things that I like to do, and again, I'm really looking forward to meeting this particular individual because I certainly would be able to help them out. One of the things that I recommend in this particular scenario, Denise, is that we use a purchase order system. The reason we use a purchase order system is not only will it help you keep track of the inventory associated with those specific line items, but it will also give them a time span. One of the things that you encounter when you're dealing with a restaurant is that product does have a lifespan. And so there tends to be a lot of loss associated with that specific product. And let's do something really simple. Let's just look at tomatoes as an example, right? Let's say that each week she orders a crate of tomatoes, right, for her wonderful spaghetti that she makes. The thing about that particular box of tomatoes that she orders, she might have 24 tomatoes in there, right? And this week the restaurant is really slow and she only uses 12 of those tomatoes, but then she has to throw 12 away. Well, from the manner by which you're talking about her, she would still incur the cost of those 12 tomatoes, right? And she would track the expense of those 12 tomatoes, but she never really utilized those 12 tomatoes. And so there's a loss there that she incurred that she is actually not tracking from an expense standpoint. And so the key behind this is to track what specific line items and how much of that specific line item that she's using on both a weekly basis and a monthly basis. Now, the nice way to go about doing this is if you tend to deal with these large vendors when you manage a restaurant, whereby you're ordering like 50 different line items. It might be onions, tomato, meat, pasta, oil. And by utilizing a purchase order system, you can go ahead and generate a purchase order within the system. The system will then send that to the vendor to let the vendor know that I want 10 of this item, 10 of this item, and 10 of this item. In turn, the vendor can then fulfill that order to the best of their ability, which then QuickBooks gets a notification coming back stating, well, you ordered 3 cases of tomatoes and your 3 cases of tomatoes will be there on Tuesday. She can then plan out how long those tomatoes will last her, depending on the timeline associated with using them, how busy she is, and she'll be able to track the expense associated with those tomatoes at a line item basis. This gives her greater control from both a cash flow perspective, because she knows exactly how much she's spending on a specific line item. The other part about it is key is if there is a loss associated with the purchase of those tomatoes. So let's say she orders 3 cases and she only utilizes 2, and she has to either throw one out or donate it to a nonprofit, i.e. a food bank or something like that. She can then get that credit associated with it coming back to her. So really having an understanding of what the expenses both going out and coming in is key. I say this because I've dealt with a lot of small mom and pops restaurants who just look at the total associated with the cost of goods and really don't manage it at that individual level. And you really hurt yourself there, because what tends to happen is that they have a specific order each week that's going out, irrespective of the time of year and how busy they are. And this hurts you on both sides. You're either over ordering or under ordering, and you really don't have a clear idea of what the cost of goods that you're paying for and utilizing. And so that's where taking the time to set it up correctly within QuickBooks, managing the purchase order system. The other part about utilizing a purchase order system is that you have an inventory associated with it. So the system will know if you've ordered 3 cases of tomato, the system knows that you've got 1 case in the fridge and you've got 3 coming in. When you go to invoice or bill a customer, or even on a restaurant level, bill a customer that's sitting inside, the system will know and let you know in turn where you are at from an inventory perspective. And once you have control of your inventory, it's a lot easier for you to manage the cash flow from the expense standpoint. Does that kind of answer your question?
Yeah, it just sounds really complicated. I'm just wondering, well, I mean, if she wrote everything off as cost of goods sold, but then a week later adjusted it for what tomatoes she still had. I mean, like she would credit cost of goods sold and debit inventory or something for those tomatoes she still had at the end of the week. Would that be accurate or not?
Yeah, no, that would be accurate. The nice part about this, Denise, is the system will do it automatically. That's if the system knows that you've done a purchase order for X amount and that you have an X amount in inventory, and then she goes in on a Friday and goes, well, I had 3 cases at the beginning of the week and now I've only got 1 case, the system will do that automatically. It's not like she has to go in and plug that number in a specific line item. The system will actually do that for her automatically if it is set up correctly. And that's why I talk about ensuring that both the products and the services are set up correctly. Because again, at the end of the day, what she's going to start to find is there's patterns associated with the expenses and the cost associated. So if she has a dish in particular that's really, really popular, let's say her spaghetti is like the reason people go to that restaurant, well, then she's going to be able to pick up on that pattern very, very quickly. And instead of ordering tomatoes, twice a week, which in turn is a greater cost, she could order them once a week and order more, and in turn negotiate a better price because she's ordering more. And so this is how you're able, by utilizing the purchase order system and the inventory system, to wrap your arms around the cost of goods being sold.
Okay. All right. Thank you.
And again, you're very welcome. Okay, so we just touched on products and services and taking the time to ensure that they're set up. Do remember that products and services is any kind of product and or service that you are providing to a customer. And that could be anything from a service like being an accountant, the time and effort that's associated with billing a system, creating it, invoicing an individual, or a specific product, let's say a bottle of wine for a winery. Most people just assume that it's just the bottle. Well, it's actually not just the bottle. It's the bottle, it's the cork, it's the labeling, it's the printing that's associated with producing that bottle. So one of the core issues that I tend to see when it relates to a product here is that not all those expenses are being captured correctly. So you, as the owner of the business, really don't have a great idea of what it is actually costing you. And the reason for this, that it's so important, is to understand the margins associated with each specific product. Obviously, the greater the margin, the more profit you're making on each item, which helps you price it more effectively. This is something to really keep in mind and something QuickBooks does really well for you. You know, if you go ahead and you set up a specific product that has a total cost of, let's say, $5, and then you're selling it for $10, the system is automatically going to calculate out those margins associated with that one specific product. The nice part about this then is when you go to do your reporting, you get a clear idea of what products are more profitable and what products are less profitable. And conversely, the same goes for services being rendered. If you have specific services within your business that are being rendered, the system is going to be able to capture for you which services are more popular and which services are less popular. Conversely speaking, products that tend to be more popular, you can choose more for, thus increasing your margin. Conversely speaking, services that tend to be more popular, you could charge more for, increasing your margin. So these are some of the simple things that you can do from a products and service perspective that help you both have a better understanding of what's taking place with your business, but more importantly, help you to have a profitable business. And in turn, a profitable business is a business that can grow and become successful. I'm not going to spend too much time on things like SKUs, category codes, sales information, but I'm just going to go through this really quickly. So once you are able to set up these products and services, these are general questions that the system is going to prompt you for to set up a specific service and or item. Now, one of the things that I do like to reference here is the SKU code. Now, that SKU code is basically a stock keeping unit number. And so let's say that your restaurant, as an example, Denise, if they have something that they're regularly buying on a consistent basis, utilizing the SKU number that's associated with the product. So let's say you're buying a product from a specific vendor, and that vendor that you're buying it from has a specific SKU number associated with that product. That's the SKU number that you're going to want to reference here. And there's a couple of reasons why. If you were at a later date to do a order through the purchase order system and you wanted that specific line item, the system would capture the SKU number so that when you set the purchase order over, it would actually reference the SKU number associated with that vendor, which ensures that you are ordering the correct item and the correct quantity associated with that specific item. You can still label it however you choose to label it, but utilizing that specific SKU number ensures that that vendor that you're going to then be ordering, or conversely speaking, if you're billing a customer, it relates to that specific line item. The other part about this that I'd like to touch on really quickly is the category coding. If you're using a category coding within a service or a product, it's key that you want to specify exactly what that category coding is. And as this reference in this slide that we're currently on, it's a means of classifying a product or service sold to a customer. Additionally, categories save you time when completing transaction forms since they search for the item by a specific category. So for an example, if you had a category code associated specifically with food, or a category code specifically associated with maintenance, things like this that would basically gather the group together and make it easier from both a reporting perspective and a tracking perspective. Now, sales information description basically is a description of what the product is that's being sold. The description will automatically populate with the description field on the sales form. So take the time to go through this and ensure that it is set up correctly. The other part about this, and probably the most important part about this specific item, is the sales price. Now, this is what you're actually going to charge the customer for this specific item. And the reason for this that's so important is as you build out the service and sales side of things from a both product and service side, the system is going to go ahead and calculate the margins for you again. And once again, we talked about this a little bit earlier, but once you understand the margins associated with either a product that or a service, you're able to wrap your arms around what is really driving your company from a product and or service perspective. So if you have a particular product that certainly is more popular than not, this is where you're going to be able to capture that. Lastly, but not leastly, is the income account. So the income account is associated with a product or service. Pay attention to the account being selected to ensure that it is an income account. So where those specific line items are hitting, you always want to ensure within the chart of accounts that you have that income account set up correctly. Now, Denise, in particular, relating to the question you had about the multiple properties, this is where we would set up multiple income accounts by each property so that you would be able to track the profitability of each property individually at the individual line item perspective. Lastly, but not leastly, at the bottom here, we want to know is tax relevant for this particular income code. So if we know that there are taxes associated with either this particular product or service, this is where you're going to mark the specific item to say, or this particular service to say that, yes, this is a taxable event. The nice part about this is once this is set up correctly, the system will actually accrue that tax liability for you automatically when you go to invoice either the customer side of things from that perspective. Purchasing information relates specifically to things like what we talked about a little earlier, where you're using either a purchase order system to go ahead and set up a service provided either by yourself or by a vendor that you are buying from. Once these are all set up correctly, it's simply a matter of saving and closing this out, and now you have another service and or product set up within the system correctly. Take the time to make sure this is set up correctly. If you are invoicing your customers monthly or there's a high frequency, you're going to be using this a lot, especially if you're on the retail side. Service side tend to have specific line items related to the service that is being provided. And as such, you want to ensure that those are set up correctly too. A lot of businesses tend to just use a general service setup procedure. If you have more than one service that you're providing, take the time to set up each service so you can track each service individually. This will help you from a reporting perspective and a forecasting perspective. Oops, jumped too far ahead there. Okay, we did products and services. Let's talk really quickly about bank accounts. So, Karen, you weren't on the line a little earlier when I touched on banking really quickly. Making sure that your bank accounts are linked up correctly is key, keeping track of your cash flow and reconciling the bank statement with what's in QuickBooks. Now, the nice part about QuickBooks Online specifically is that once it's linked up to your bank account, and the process of setting it up is very, very simple. As long as you have the title and the bank account number on hand, the system will actually walk you through step by step setting up that link. Once that link is established, the system is going to track the transactions that are taking place specifically at the bank. And when you come in the next day, they're actually going to be waiting for you within the banking system so that you can go ahead and match them up with either an invoice or associated expense within the system. The nice part about this is once a transaction has been lined up, i.e. a specific payment has been tagged to a specific invoice, the next time that invoice comes through, the system will automatically make that correlation between the two. Now, this does get a little bit more complicated, as I touched on with you, Denise, a little earlier, where you're dealing with multiple locations and ensuring that a specific transaction is correlating to that specific location. So in your case, we had 10 different rental properties. We would want to ensure that a specific transaction that is coming through relates to a specific location. It's a little simpler when you're dealing with a transaction coming through relating to your friend with a restaurant. Well, it'll be a lot more simple because they know that each of those expenses are strictly associated with one location. In that case, it's simply a matter of correlating those payments directly to either a bill or an invoice that is currently waiting to either be paid or marked as paid. Again, the nice part about this is once you do it for the very first time, the system will actually make the correlation for you. And then it's simply a matter of you going in and reviewing the transaction, making sure that the correct category code is associated with that transaction before confirming it. The nice part about this is once you do get into the habit of doing this, and I recommend if you do have a fair amount of transactions doing this on a daily basis, is that the balance within QuickBooks will always tie directly back to the balance that you currently have at your bank account. This is really helpful when you go to reconcile QuickBooks at the end of the month with your bank account. Because generally speaking, what tends to happen in these scenarios is people tend to go in maybe once a week to do this, and then are reviewing and approving those transactions on a weekly basis as opposed to a daily basis. Ideally, you want to go in on a daily basis so that your bank balance is reflective of what your QuickBooks balance is on a daily basis. Now, this is not imperative if you don't have a high volume of transactions, but if you do and you are trying to actively manage your cash flow, this is an area that I would pay particular attention to. Again, if anyone has any questions related to this, just let me know. I'm not going to go too in depth into linking the bank accounts up. One of the things that QuickBooks does super well is walking you through this process. Do know that you can not only add bank accounts, but you can also add credit cards onto the system as well. The process is super simple. If you go through the list that's online, you will see pretty much every bank and or credit card company that's in the continental United States. If not, they do have a search bar in there that you can utilize to search out the specific bank or credit card company that you are currently working with. The nice part about this from a credit card perspective is those transactions will actually show up almost immediately. They don't operate like a traditional bank where they're showing up overnight. Those transactions will actually post a lot quicker. The nice part about this from an invoicing perspective is it does also enable your customers to pay you via credit card and a bank account, which means that you're getting your payments, i.e. you're managing your cash flow a lot quicker. Remember, we do have the ability to directly invoice out of QuickBooks directly and give your customer the opportunity to pay you directly, thus opposed to the old-fashioned snail mail of generating an invoice and dropping it in the mail. Again, just walking you through signing into your bank account for the very first time to connect it. It will walk you through this process. Just ensure that you have all your relevant bank account information on hand, including your username and password. I'm not going to go too much into importing transactions into QuickBooks. We touched on that a little earlier when we talked about the ability to import data directly into QuickBooks. One of the things that you can specify is QuickBooks will go back up to 90 days for you, pulling the information into the system. If you do have information that you would like in the system that goes back even further, it's simply a matter of downloading those statements and then importing them directly into QuickBooks. The setup process for importing into QuickBooks is not too complicated. It is based on an Excel spreadsheet system. So there are templates within QuickBooks that they will provide to you to enable you to go in and do those imports. How to add a specific transaction. This one I get pretty common. This relates more to transactions that are outside the traditional. So this would be things separate from like credit card transactions and bank account transactions. But there might be a scenario where you do need to add a specific transaction. All of these transactions can be done through the banking system. If there's a specific transaction that you want to track or show within the system to track, or possibly have the specific expense hit multiple accounts, this is where you're going to go ahead and do it. As you can see, it's very, very similar to what you would see on a invoice and or bill template, where it's specifically going to relate to the expense, the supplier / payee, and the category coding. The nice part about this is you can actually tag it to a specific customer and or a specific location, should you choose to. And then the memo part at the bottom, take the time to input it. It's one of the things that does show up on the transaction from a reporting perspective. Far too many people just leave this blank and then go run a report 2 months later and go, man, I really have no idea what that was for. I know it's a little bit more effort to have to type it in, but even something as simple as like this example where you've got Starbucks in there really makes a difference when you're trying to track a specific line item. The other part about this that can be done is that you can do transfers. If you're looking to transfer either cash between different expense categories or do an internal transfer within QuickBooks itself, can be done through this same system. I'm not going to spend too much time on here because not many people actually use the transfer transaction these days within the system. There's specific institutions or entities that use this more commonly. Large brokerages are certainly one of those. And Denise, in your case, if you were transferring cash from one location to another, this is the method that you would capture that taking place. The nice part about this is you can run specific reporting behind these specific transactions, these debit and credit transactions. We touched on credit cards. These days, it's so easy to do. The system is really going to prompt you for the category codes associated with each of these transactions when you go into the banking system. The nice part about this, again, is once you align that category code with that specific vendor, the system is going to remember it the next time you go back in and will only ask you to review instead of asking you for the category coding. Conversely speaking, when you are setting up either a customer and or vendor in there, you want to make sure that the correct category code is being associated. This will make it far easier when you go through this review process as a whole. I'm not going to go into the bank rules. By default, they're pretty straightforward within QuickBooks. This only relates to specific transactions that are to hit specific accounts. Denise, oh, there goes your hand, Denise. I see you.
And I unmuted myself, Damon. Yes.
There you go.
I was just curious, though, for that property manager, any rental income she gets, wouldn't that be a liability to her business? You know, because it's not her money. She owes it to the owner of the property.
Well, so it would depend on how that is structured, right? If it's simply a flow-through scenario, then yes. But I'd want to see how first of all, I'd like to see how the agreement is structured, because remember, one of the statements you made to me at the beginning of this was that she took a percentage of the gross, which is a little unusual, just so you know. Normally you have a fixed salary, and then there's a percentage of either a bonus or a commission that's paid on things like either occupancy levels or a minimum threshold that's maintained. This is an incentive to that individual, basically, to keep the occupancy up. Now, with that said, it is not a liability to the business itself, because the actual individual owner would do what's known as a drawdown against that cash position, which is, you know, he could specify, and this is where I would need to have a little bit more knowledge, because there's a number of different ways to go about this. Now, technically, it's not a liability because as such, it's going to be uncategorized cash that it would be posting to. If this particular individual had a specified amount that they would be drawing down each month, or possibly on a quarterly or semi-annual basis, it's their prerogative as the owner of the business. It would really be dictated by the structure that's set up for each location, unless all the locations are under the same structure. So to answer your question, it's not technically a liability, but it would depend on the contract agreement between your friend of yours that's managing the property and what the expectation is from the owner. It gets a little bit more complicated only because of what you told me at the beginning, where she's taking a percentage of the gross. And because she's taking a percentage of the gross, each month that dollar amount is fluctuating, right? Which means if the owner is taking a drawdown on a monthly basis after she's taken a percentage of the gross, that is going to impact the cash flow scenario. So the owner of the business that's receiving that drawdown that I just talked about is not going to be wanting to take 100% of that cash reserve that's left over after she's taking a percentage of the gross. You would want to have a better understanding of what that expectation is. And again, I'm not a fan of a percentage of gross in this scenario because it makes a lot harder for the business to be regulated from a cash flow perspective. And I keep going back to cash flow because really that's the lifeblood of any entity. And if you're pulling out more cash on a monthly basis, then you have revenue come in and you start generating negative cash flow scenarios, then we have problems. And that's something we touched on a little earlier when we talked about the different properties. So the short answer of your question is no, it's technically not a liability, but it would depend on how the owner is taking that cash out. Is he taking it out as a salary or is he taking it out as a drawdown? Both of those would impact how we manage that cash flow and conversely, how it would be tracked from an expense standpoint.
Okay.
Can I answer your question?
Yes, thank you.
Now, the bank rules perspective, I'm going to touch on really quickly because this is, Denise, where this would actually touch your side of the world. This is where we talked about having multiple locations with only one bank account. We could set up specific rules for specific locations to specify where those funds should be credited to. Because remember, ideally, when we go in to do the bank reviewing and we're reviewing those payments coming in for each one of those rental properties, we want to ensure that that monthly rent is hitting the correct location. And by setting up these rules for each one of these locations from a banking perspective, we can ensure that tenant A's payment is being applied against location A's invoice. Worst case scenario here is we don't set these rules up correctly and we have tenant in location A paying for an invoice at location B, which is not ideal. And I have seen happen many a time because this particular aspect of setting up the banking rules was not set up correctly. So when we sit down, Denise, for this meeting, this is one of the areas that I'm going to touch on, because I do recommend at times that we generate these sub-accounts within bank accounts, that you have a specific line item within the bank account that relates to each location. Not ideal if you're going to just use one account. So this is one way that you can overcome that, though, if you're only using one bank account to manage 10 different locations. Creating and managing quotes. So this tends to relate more specifically to businesses that are providing either a service and or even a product. You can basically go ahead and generate a quote that can be sent out to the customer. It's a really simple process to do within your customers. The nice thing about building an estimate out is once you have the customer entered into the system and you generate the quote is able to be converted over to an invoice with the click of a button. The part about this that's the most important is making sure, going back to a couple of my previous slides, that the services and or products are set up correctly. Because when you go to generate the quote, you're going to be entering or populating, those specific line items from a drop-down that will pop up on those specific line items. So if there's a specific service or a specific product that you are providing to a customer, you're able to select those specific products, send a quote over to them. Once you get the approval from the customer that let's go ahead and put that order in, it's simply a click to convert that over to an invoice and thus fulfill the order for the customer. Again, the other part about this that's nice is you'll notice in this lower left-hand corner of the screen, you do have the ability to attach items to either quotes, invoices, or bills. What's really nice about this is it does enable you to have a paperless system. If you have a bill or an invoice that's coming in, you're able to attach it directly to either that bill, that invoice, or that quote, so that you don't have a cabinet filled with invoices and bills sitting behind you. The nice part about this is once you go into either that quote, that invoice, that bill, you can actually see a hard copy that has been attached to each one of these. Again, I touched on creating an invoice. As you can see, we have these quotes on the system. Once that quote needs to be converted over to an invoice, it's simply a matter of clicking on create an invoice, and the system will take the quote, map it directly over to an invoice, at which point you have the ability to send that invoice directly to your customer. A nice, clean process, not much data input involved other than setting up that initial quote correctly. Again, the minimal amount of input that you can have from a physical perspective limits the errors that occur in QuickBooks, which in turn makes it more accurate from a reporting perspective. Creating and managing invoices within QuickBooks. If you've had any experience within QuickBooks up until this point, I'm sure you're pretty familiar with how you go about creating an invoice. With that said, it's simply a matter of going into the customers, selecting the customers, looking to create an invoice, ensuring that the correct information relating to that invoice is at the top, making sure that the correct invoice number, if you're using a sequential system, is set up correctly within the system. Then it's simply a matter of selecting either the services, the products that you've already set up, saving and sending it out to your customer. Do keep in mind that if this specific sale relating to a product or service is a taxable event, you will see the tax accrual at the bottom of that invoice over here. Do know that you are responsible for reporting that accrual, whether it be on a monthly, quarterly, semi-annual, or annual basis. This is where it does serve you well to have a good accountant slash CBA on hand to ensure that you are reporting correctly and in a timely manner. Unfortunately, when it comes to the BOE and the IRS, ignorance is not an excuse. And I've seen many a business that I've worked with over the last 20 years that have made this mistake, that just because they're accruing, they forgot to do the reporting. Trust me when I tell you this, the BOE and the IRS believe that if you're accruing any kind of tax liability, they are entitled to it and they want it in a timely manner. I've worked with a number of small businesses where they were given bad tax advice, as an example. I had a lady in town here who produced salsa that she sold at the farmer's market. And, you know, long story short, she was accruing, but she never reported it. And she came to me one day saying, I got a nasty letter from the IRS saying that I haven't been reporting. Long story short, she had 7 years worth of missed filings, which we spent about the next 8 months working through getting resolved. The good part about that in this particular story is we got them to forgive a large portion of it. We got it set up on a payment plan, and now she's doing great. With that said, don't lose sight of your tax accrual if you're accruing it within QuickBooks. You are responsible for filing it. You are responsible for paying it. Please keep that in mind. If you are unsure, do not have the knowledge base, take the time to go out and get a good CPA slash accountant to help you with this. It will be money well spent. Receiving payments. So the nice part about receiving payments in QuickBooks is that it's super easy to do, especially if you're utilizing the electronic method. I've talked about it multiple times up until this point. The part about this that's nice is you will see those payments post every day within your banking system. It's simply a matter of you then matching them up to a specific invoice that is outstanding. The one part that I will touch on is if you receive a physical check in the mail, as crazy as it sounds, there are still people out there that pay with a check. This is where you can actually go into the system and receive a payment and specify that check number associated with that specific invoice, in which case the system will then go ahead and apply that payment directly against the specific invoice, and thus the invoice is paid. Do note that when you do receive physical checks and you receive it in the system, just because you've received the system does not mean that the system has closed it out from a banking perspective. You then need to still go back into banking and make the deposit to the bank. The one part about this that I'll touch on really briefly, and one of the things that I recommend doing, is that if you do receive physical checks that are being applied against a specific invoice, I would correlate two pieces of activities that need to take place. The day that you actually go into the banking system within QuickBooks and click on deposit is the same day that you should be walking down to your bank and making that deposit if you're doing it manually, right? So if you do plan on physically going into the bank, making that deposit as opposed to taking a picture and doing it by the online banking system. The reason that I bring this up specifically is we talked about reconciling your bank accounts at the end of the month to ensure that your balances are tying out. This will make that process a whole lot easier. Where it gets a little bit more complicated is if you did a bank deposit in QuickBooks on Monday, but then only went to the bank on Friday to actually do that deposit. Because when you go to match up and reconcile your bank statement with QuickBooks at the end of the month, those dates associated with those two different deposits are not going to match up. Trust me when I say that to make your life easier. Number one, make sure that you're reconciling at the end of every single month. But aligning those will make it a faster process and ensure that you're tracking correctly from a cash perspective. Seems like something small, but really it is something actually rather large when you're trying to manage and stay on top of your cash flow. Customizing invoice. This is a nice feature within QuickBooks that I like to go over really briefly. One of the parts about this is super nice is you can actually go ahead and customize the invoice that is going out to your customers, i.e. you can put your logo on it, you can put your customer information, you can provide them with your banking information to have a faster payment come through. Take the time to go in there. Remember, this is what your clients/customers are seeing from you. we want to spend the time and make sure that you got things like your name, your logo, contact information in case your customers have questions. The worst scenario that you want is your customer has your bill, they want to pay you, but they can't get in contact with you. So things like email addresses and phone numbers on there should be referenced as well as your banking account information if they wish to make a direct payment. Do remember, though, that QuickBooks Online does have the ability to receive payments via credit cards, which in turn are credited that very same day, which is really nice. This in particular is nice if you have net terms with your customer, whereby your customer might have net 30 terms, which gives them 30 days to pay you, but they choose to go ahead and pay you right away. This is a great way to help you manage your cash flow. Not going to go too far into attachments again. Just like what we talked about when we had bills, creating quotes, you do have the ability to attach a specific document to pretty much any transaction within QuickBooks. The nice part about this is that it does enable you to go paperless, but it also enables you to go ahead and have that document attached to a specific transaction so that when you go to look at that transaction, you can pull up the supporting documentation. We've talked about expense transactions. Really simple to enter in the system as long as your category coding is set up correctly. You're simply going to go in and specify what the associated expense is with the dollar amount of expenses associated with it, and in turn mark it at this point in time, because you've gone ahead and set up your products and services correctly, your system is going to know whether this is a taxable or non-taxable scenario. Oh, Denise raised her hand. Awesome.
Yeah,
Go for it, Denise.
I have a lot of questions. Well, I'm just wondering, I have this other S corporation and the lady likes to deduct mileage, but you know, she's a statutory employee of her S corporation, but she uses the business credit card to charge all her gas, you know, so she's either actual or standard mileage rate, but she wants to do both or something. So what should I tell this person?
Well, so from a GAAP perspective, you know, really that is not correct. You can't have both sides. Look, the credit card transactions are going to hit when you get the statement at the end of the month. And so therefore, if she's actually charging that gas to that specific credit card, she really shouldn't be claiming the mileage as well. Now, a portion of that that's specified out there is actually for wear and tear on the car, but really she should not be claiming the full amount of that mileage. So as an example, if it's, you know, something like 35 cents a mile, really what that 35 cents entails is the wear and tear that's taking place on the car, things like tires, insurance, et cetera, et cetera. But from an accounting perspective, she should not be claiming both sides of it. The other part about this that makes it a little bit more difficult and why I would lead her away from doing it is because you cannot track that every time she gets in her car and utilizes that car, is it strictly for business purposes, right? And this is where things like a per diem come into play. If you do have a particular individual that's specifically using their car, let's say they're a sales individual who are on the road a lot, to manage it from a cost perspective, it would make far more sense to give her a per diem than have her claiming both the gas, which is hitting the credit card, which is then a business expense, and the mileage. So you're doing a disservice to the business there. And generally speaking, from an audit perspective, you would be cited if someone were to audit that, because really she's claiming more than she's entitled to. And so I would simply inform her of that fact, that she's putting herself in this position based on that alone. And really, you know, it's double dipping is what it is really doing. And if anyone were to take a look at that from an accounting perspective, it would be a red flag.
Yes. Well, one last question I have. She accrues payroll liabilities because she has that software, the payroll software that she pays for every month. The module. Sure. Yeah, on her QuickBooks Online. And so it's a liability and it accrues, and then, it gets paid when it's due. So then
Right.
on the bank feed, should I say add that or match that or what?
Yeah, you should be matching it. So, if that expense is associated with that individual, right, it should be an offset. And the reason I bring this up is from a payroll perspective, you should only be managing payroll in payroll. In my opinion, what I did in these instances when I was at a large corporation where I was dealing with both payroll and reimbursable is I would actually have this individual set up as both an employee and a vendor. I would run payroll through payroll, so time associated with the work she did at a fixed rate. But then any reimbursable that she incurred from an expense standpoint, I would run it through her as a vendor. And the reason for this is I could keep the two worlds separate and track them more effectively. The moment you start to commingle both of those transactions, it makes it really, really hard to track both sides, right? So you may have an employee that's getting paid X amount of dollars, but the expenses associated that are also hitting the payroll side. Not really a good idea. Ideally, you'd like to keep them separate so that you could track those expenses. The other part about this is if it's relating to a specific location and or project, you really want to make sure that that expense is hitting that specific project or location that we're talking about. And tracking it in the manner that you're talking about, it's going to be virtually impossible for you to do it. So to answer your question, you should be matching them up with the correlating bill. The question I would actually have for you is if she's using a credit card on a monthly basis to do these transactions, and at the end of the month, you're getting a bill from the credit card company, that bill should hit the vendor. So let's say that our credit card is through Citibank. And the end of each month, Citibank sends you a bill. That bill is going to be entered under an expense, right? Under a specific vendor that you're dealing with. One of those line items within that expense is going to be her expense for gas. And so that way, if you were to run a report on this specific individual, you could actually see from an expense standpoint on a monthly basis how much expense she's incurring for her travels over that period of time. And that's why I don't believe it's advisable in this case. And I probably need a bit more information in regards to what she's doing and what she's working on. But I am not a fan of running those specific expenses through the payroll side of things. I would like to keep them separate, completely separate. And all this really means is that she's just getting an extra payment each month, right? Because reimbursables should be done at a minimum on a monthly basis. You really shouldn't have them rolling over into prior months. And the reason for this is you're then not capturing that expense within the correct month. And that can be important as well.
Okay, thank you.
You're welcome. Okay, let's talk about bills real quick. Again, once you have, at this point in time, I'm assuming that we have all our vendors set up correctly within the system. One of the things that's super easy to do and work through in Quickbooks is entering a bill. You get the bill in front of you. You're looking at Quickbooks. You go ahead and go into the specific vendor. You go to enter a bill on the dropdown. The vendor comes up. It shows the terms associated with that. It shows the bill date and the payment date. You then go ahead and plug in the necessary items below in the category details relating to the product and or service that you have purchased. At which point in time, the system will enable you to forecast when that payment is due. The part about this that's really nice is this enables you to manage your cash flow more effectively. One of the things that I highly recommend doing on a weekly basis is getting comfortable with your AR, your accounts receivable, and your AP. Specifically, these are bills that you've entered into the system that are then due either 30 days, 45 days, 60 days out. One of the things that as a habit I would get into to help me manage my AR and pay my bills in a more timely manner is every Monday morning, first thing when I got into the office, I would run all my accounts payable, and then I would run all my accounts receivable. I would always ensure that I was not paying out any more than I was receiving in. This is a way, especially from a small business perspective, to manage your cash flow effectively. Now, in any business, there tends to be a cycle that exists within businesses, busiest times of the year, slower times of the year. But the point I'm trying to actually make behind this is managing the terms that you have with your vendors is a great way to help you manage your cash flow. What do I mean by this? Well, if you have net 15 terms with your customers, which means your customers have 15 days to pay you, but you have net 30 terms with your vendors, it is always going to put you in a better cash position as you proceed. The simple matter of the fact is that you have 15 extra days that you have before you have to pay that liability out. And the nice part about this is as you build that relationship with your vendor, meaning you pay them on a timely basis, meaning you're running that report each Monday, your vendor will increase the terms that you have. So when a business first starts out, one of the hurdles that they have to overcome, and I keep talking about this, is the cash flow side of things, really managing the cash coming in and the cash going out. One of those great ways to manage that is by getting better terms with your vendors. But the problem is when you first start out and you're a relatively new business, you have no credit history, right? And as such, most entities that you deal with from a vendor perspective are going to give you very short term, net 5, net 10, or possibly be a cash on delivery basis where they expect you to pay it when you get the product. But as you build the relationship with that vendor, and because you're paying that vendor on time each time, you can go back after 3 months and go, look, for the last 3 months, I've had net 5 terms, I've paid my bills on time. How about you give me net 15 or give me net 30 terms, right? This is a great way for you to manage your cash flow by improving the terms that you have with your vendors. This is not something that people always take note of or take advantage of because they don't understand the relationship between accounts receivable, money coming in, and accounts payable, money going out. This is just a simple methodology that you can use to help you manage it. And as I've stated many times before in this workshop, cash flow is key to having a successful business and, more importantly, growing a successful business. Reoccurring transactions. So I'm going to really touch on this really briefly because it, again, much like the transactions that we talked about earlier with bank account transactions posting within the banking system, reoccurring transactions that occur regularly on a monthly basis, these are things like utility bills, water bills, internet bills. The system is automatically going to go ahead and make that correlation between either the payment going out or the payment coming in for you. And the nice part about this is just like what we talked about earlier with your customers, you can set the system up to automatically invoice your customers for you on a specified date with a specified amount. You can go ahead and set out reoccurring transactions in the system that will happen on whatever that frequency that you specify, right? Now, the nice part about this is the system is still going to ask you to review that transaction before it lets it go through and books it within the system. But the nice part about this is that you can go ahead and set it up to automatically pay out on certain transactions. So one of the things that you'll notice these days, and the example I like to use for this is subscriptions. Subscriptions are great. It's a fixed amount every month or every quarter that comes in. The difficult part about subscriptions and that people encounter is that subscriptions don't always generate an invoice. They don't give you a bill to pay. So reoccurring transactions are nice to set up when it relates more specifically to specific, i.e. transactions taking place or subscriptions. And that's the best example that I'm able to give you in this specific scenario. With that said, take the time to be reviewing these. If you have a reoccurring transaction taking place and you have a reoccurring transaction going out, make sure that you're staying on top of it. A lot of the time, one of the problems I do see with this is that it's a specific dollar amount associated with a specific transaction. And as an example, a subscription rate might increase. Therefore, you're not making the right payment, or it may change without notification. So staying on top of these is key. And these can all be managed through the list item within QuickBooks, which I will actually touch on really briefly a little later on. I'm not going to do anything relating to turning on class tracking or location tracking relating to this. If you have a specific question in regards to this and have used Location tracking or class tracking, I can talk about it, but most businesses that I've come across do not use this. The one exception to that has been construction companies that will use the specific location tracking. So unless you ladies have a specific question, I'm going to just jump over this. Just a reminder, you will get a copy of this document at the end of this. If you do have any further questions, you can always reach out to me directly. Partial purchase orders, we touched on this really briefly. Purchases are a great way to manage both an inventory and a purchase perspective. It'll show you what you currently have in inventory. It'll show you what you have from a purchase order perspective outstanding that still needs to be filled. More importantly, purchase orders can be partially filled. What this means is you may order 3 line items on a purchase order that you put together to send out to a customer. This specifically relates more to a physical product that's being put together. The example I use in this particular instance is if, let's say, the wine bottle is a great example of this. So if it takes 5 specific components to put that wine bottle together before we can put wine in it, so we've got the bottle, we've got the cork, we've got the label, and we've got the foil that goes on top, and then the whatever else it takes to put that wine product, that bottle together before we can sell it to a customer. Well, if all 5 of those components are not on hand for you to be able to generate, you can't fill that bottle with wine and then sell it to a customer. The nice thing about the purchase order is that you would be able to order all 5 of those components. The system would track how many you currently have in inventory, how many are outstanding for the purchase order. So let's say you ordered those 5 items from, let's just use one specific vendor, and the vendor was only able to fulfill 3 of those items initially. The nice part about that is the system would calculate for you how many of those specific wine bottles you could put together to fulfill an order you may have. This is something similar to what we were talking about earlier, Denise, when we were talking about your friend. Oh, actually, did she drop off the line? When she was running the restaurant and managing the products that she has in her cooler to fulfill the orders from a restaurant level perspective. Again, I'm not going to dive too much into this. If you've utilized the purchase order system before, it's a great way for you to manage inventory. And I'm going to really just jump on from that because unless you're utilizing it, I don't want to spend too much time. Karen, it looks like you're the only one on the line with me now. So if you have any specific questions in regards to what I've gone over so far, I'm only going to go about 8 more slides. I'd love to know if there's anything specific you'd like me to address, much like what I was doing with Denise, or if you have any specific questions relating to either QuickBooks Online or QuickBooks Desktop. So we've touched on add the purchase order to your bill is a great way of managing it when you have a specific project that you're working on. One of the things that QuickBooks does very, very well is manage specific projects. An example of this would be, let me see, who could I use? So I have a client who sells flowers at all the different farmers markets and really wanted to be able to track the expenses that she was incurring and the revenue that she was getting in on a specific farmers market. So there was one here in Slough, she did the one down in Avila, and she did the one in Pismo. But really what she wanted to be able to do is see what each one was incurring from an expense, renting the spot that she sat at, how much it was costing her to get set up there, traveled there in her car, and then how many bouquets of flowers she was selling each time she went to each specific farmer's market. This is where you're able to use both the product and the purchase order side of the system to track those expenses associated with these specific line items. Not going to go too far into this because it's literally exactly what we just talked about with setting up a purchase order. The only difference would be, is it a specific purchase order for a customer or a specific purchase order for a vendor? Again, if you have a specific question relating to this or want me to dive in this a little more, please just let me know. I don't want to touch on a topic that really doesn't relate specifically to your business. Budgets, probably one of my favorite sections within QuickBooks. So one of the things that it takes to run a successful business is to be able to track both the expenses and the revenue that are coming in and going out. In many ways, this is directly tied back to the cash flow that we talked about earlier. But one of the key components to this, to making your business successful, is having a budget in the system that you are then tracking against. And what I mean by tracking against is we can run a report that is able to actually articulate your budget versus what is actually taking place. And the reason that this is so important and that you really want to make sure that you are tracking this correctly is it will keep you on the path to being physically responsible with how you manage your cash. An example of this, and just a simple example, is if you have a specific line item within your budget. Let's say you had a $10,000 line item within supplies for cleaning materials, right? And you're 2 months into your year and you've spent 50% of your budget for supplies. Guess what? You're probably going to go over budget for supplies. Now, I know supplies seems like a very small item relating to the overall budget, but managing specific items at the budget line item perspective is key for your company to be profitable. Profitable companies have more cash to reinject back into themselves and thus grow and become a more successful business. So entering the budget into the system and tracking against that budget on a monthly basis is key to building a successful business. Take time to make sure that you have a structured budget and that you are entering it into the system. The good part about this is QuickBooks makes it very, very easy to enter that budget into the system. Setting this up is simply a matter of going to the icon in the top right-hand corner of the screen within QuickBooks Online, bringing up the general page form and clicking on budget. Once this is done, you can simply go in by a line item basis and do it on a monthly basis and or over an annual basis to be out of tracking. Take the time if you really want to set your company up for success to have a budget that you are at least tracking against. In many ways, the budget is the roadmap to success, just like a business plan is for your business. The nice part about this is you are then able to either on a daily, weekly, or monthly basis go in and run your budget versus actuals that makes sure you are keeping yourself within those parameters of staying on budget. Staying on budget is going to enable your company to be more profitable, which in turn enable your company to grow. Now, let me jump to the next slide and talk about projects. Projects are a great way to track a specific location and or entity from both a revenue and an expense standpoint. The nice part about this, and I'll touch on briefly what Denise was talking about earlier, she had multiple locations that she wanted to be able to track those specific expenses at a specific line item detail relating to one location. By setting up each one of those separate locations as a project, we're able to capture and track both expenses and revenue relating to that specific location, right? And imagine each project like it's either an entity and or a location. Most common example I use and that I've encountered in my experience is with construction companies where they'll be building homes, or in my case, they were installing solar installation at multiple different locations. Each one of those locations was set up as a specific project. That way, any time and effort that was associated from a payroll perspective could be tagged to that specific project, capturing the expense that's associated with it, and or any vendors that we were buying product to fulfill that specific project, i.e. building it, could be associated with that specific project. Again, just a brief overview from the product level perspective. Again, if you're looking for some more detail in regards to this and you really do have a more complicated scenario, let me know. I'd love to sit down and have a meeting with you to really ascertain what exactly needs to take place. I'm not going to go too far into the project settings. You can set up specific budgets for specific projects. Again, much like what I talked about just a couple of minutes ago, you are then able to track your budget versus actuals. In all my experience dealing with these specific projects, the most common occurrence that I saw that did not enable us to be profitable is when we were going over budget. And that's because the project managers working on these projects were not running their budget versus actual reports. And so if you're not doing that, you're not going to be able to track your expenses effectively and thus not be able to stay on budget. please keep that in mind as you proceed through using the project side of things. I'm going to basically go over these couple of slides only as they specifically relate to tracking projects and expenses. Ooh, what do we got here? Whoa. Okay. We're looking to set up QuickBooks for a company. Everything you provided so far is really helpful. Extra Action Design LLC is a startup company, and we are currently transitioning from a single-member LLC to a multi-member LLC. We have a Wells Fargo bank account. Oops, lost my spot. We have a Wells Fargo bank account, though we may need a new AIN. That's a strong possibility if it's a new entity with the transition. And I will be sure to look into linking it with QuickBooks account. We also have a CPA, smart, connected, that may be able to help us with the initial setup, as you advised, having a CPA help with, if that's not CPA help, if it's not your area of expertise. Any general advice, recommendations, if you were new to using QuickBooks and ease of integration with the budget, tracking, etc. If we have setup questions or run into any other questions, what tools are available through the hothouse? I also saw QuickBooks integrate well with other time tracking software, i.e. Pick and Spot. So we intend to use them. Great. Awesome question, Karen. Here's what I'm going to do. I'm going to stop going through the slides that I'm going through right now, and I'm going to answer all of your questions, because everything after this point is not going to answer any of those questions. And in the time that we have left, I'd rather answer those questions for you. So first of all, I've been doing QuickBooks integration for the last 21 years. I've worked with everyone from small mom and pops to large C Corp corporations with 800 employees, and I would be glad to help you out through the SBDC. As long as you're signed up as a client for them, we have a number of QuickBooks consultants, including myself, that specialize in the area. I don't know if you were on the call at the beginning of this. One of the things that I did spend some time going over at the beginning of this workshop was the setup within QuickBooks and what it takes to get QuickBooks set up. I'm going to start right at the beginning with some of the questions that you did have. If you're going to establish a new LLC and or considering incorporating, I would highly recommend getting a new EIN number. It will segregate the old business from the new business very easily. With that said, if you have any QuickBooks experience and want to work with one of our consultants, it's not that hard to set up QuickBooks correctly. Now, if your scenario is a little bit more complicated, I would either advise making a meeting or setting up a meeting with me and or possibly one of our SBDC consultants or with the CPA. The advantage to setting up the meeting with us is that there's no charge. This is a service provided by the SBDC to local business to help them grow and become profitable. So with that said, the key aspect in regards to getting QuickBooks up and running is the chart of accounts. I would say that that would be the area that I would focus on most. The basic part of setting up things like customers and vendors is very, very simple from a data input perspective. They're really probably the most expensive, the most important component of getting QuickBooks set up. Other than the products and services that I did touch on with you briefly earlier on, is making sure that the chart of accounts is set up correctly, specific to your business. The reason I reference this is an area that I see probably the most common mistakes being made. Now, when you initially set up QuickBooks and get it set up, there's 33 to 36 line items that tend to be within the chart of accounts. These are just general line items related to businesses in general. This can be everything from the revenue side of things through the liability side of things. This is where you want to spend some time and really ensure that the specific line items that you wish to track from an expense standpoint are set up in the system correctly. Now, I would need a little bit more information regarding what kind of business you are actually running, whether it be a service-based business or a product-based business, to really help you effectively set up those chart of accounts. But one of my recommendations in this scenario is actually that you come in. It's a product-based, great. So the key area within the product-based business is really what do we want to track against from a line item perspective, right? And so this is where we want to spend the time and set up all the things that we talked about a little earlier from the products and service side. So what it's actually costing you to put that product together. And in turn, ensuring that from the GL perspective within the chart of accounts, that we're tracking those specific both expense and from a revenue perspective. As you bill the customer and receive that in, we want to make sure that there's a correlation between the two. One of the most common mistakes I see is that when a new business is set up, they literally put everything in the kitchen sink into the chart of accounts. And invariably, they end up coming to me with like 130 line items within the chart of accounts, of which they use 20. And so this is where they create the scenario that they're actually making more work for themselves by not taking the time to actually build out that chart of accounts. So one of the first questions I would ask you if we were to sit down is, what kind of product are we providing? Is it something like a gem in a jar where I need to really ascertain what it's costing to put it together? Is it a physical product like a skateboard that we're selling to, customers out there directly, or dealing with an intermediary in between? So understanding what specifically we're talking about, but my first bit of advice for you would be to set up the chart of accounts correctly. And obviously I need a bit more information relating to your business. So my recommendation here in this regard is that once we're done with this, I can have Madison reach out to you and we can set up an appointment where we could either do a Zoom call and meet in person. I can get a better idea of the entity that you're talking about and what kind of product you're actually producing. In turn, that would enable me to help you set out an effective chart of accounts. And that's going to be the first place that you're going to want to start. The easy parts about this are going to be things like bringing in customer information, because we can simply work with you to import that information if you have it in another database somewhere or on a different system that you've used for an ERP system in the past. The same goes for the customer side of things. And then bringing over relevant financial information, i.e. bank information, transaction information that you do want QuickBooks to capture. Remember, we always want to look at this as an annual situation, ensure that we're capturing all the relevant expenses and revenue on an annual basis. Now, if you're doing this transition mid-year, I always recommend that we try to do these transitions at the end of the year. It just makes it a lot easier for a clean break. With that said, I completely understand that that's not always the case with businesses that can't wait until the end of the year. So I can help you with the migration process from whatever system you're using to the new QuickBooks system. And the good news on that part is that QuickBooks does do a good job of helping you walk through that process. So to answer your question initially, it's making sure that the new entity is set up correctly with the Secretary of State, whether that means applying for a new EIN number, making sure that your chart of accounts is set up correctly. If not with us, getting a decent CPA to work with you. Again, money well spent in this regard. And the next step would really be about setting up the product side of things. What it's actually costing you to produce this product, so you can really calculate out what your margins are, in turn to make sure that you're tracking it correctly within QuickBooks. Let me make sure. Any other things that you touched on here? Integration, yes, QuickBooks does do a fantastic job in integrating with a number of different outside vendors and or apps. And it has a myriad of apps that are able to actually be installed on it that you can utilize. Now, in regards to a knowledge base, one of the things that I'm a big fan of within QuickBooks is that QuickBooks does have an online knowledge base. I'm going to actually see if I can bring it up and show it to you. And the nice part about this is that the knowledge base has been around for about 15 years now. Let me see if I can share this with you really quickly. Share. Hopefully you can see the screen. So this is the QuickBooks knowledge base. Now, if I have a question relating to QuickBooks, even though the Cal Poly SBDC actually has a direct relationship with Intuit, meaning I actually have someone at Intuit I can email questions to. If I have a question I can't answer, this is the first place I go. As you can see, the link at the top, it's quickbook.intuit.com, learn and support. Any question that you can think of that you have for QuickBooks, I can guarantee you someone has asked before. It doesn't matter what it is. And if you type this question in here with as much detail as you can, you will find hundreds of answers from multiple users and or QuickBooks experts who have answered that question at least 100 times already. And so having that knowledge base on hand as you proceed through this process of migrating this information over is absolutely awesome. In fact, once I'm done with a lot of my training and I brought people to this specific location from a QuickBooks support, it's kind of like the go-to from an information perspective. Because you can ask anything, and it's broken down into categories, whether it be QuickBooks Online, QuickBooks Desktop, QuickBooks Online Payroll, Intuit Payroll, and then QuickBooks Payments. And the nice part about this, like I said again, is any question you can think of, somebody has probably asked already in regards to this. So those would be the answers to the question that you posed right now within the chat. Let me make sure that I'm not missing anything. And if there's anything additional you want me to talk about, let me know. Again, I would love to set up a meeting to see if we could sit down and spend a bit more time so I can get a bit more knowledge relating to the business and the sector that you're in, and I could help you basically set up your QuickBooks for this new entity. QuickBooks question tools. Yeah, this would be my go-to tool, to be quite honest with you. The other part is QuickBooks is literally adding additional apps and integration almost on a daily basis right now. I know that when I started off with QuickBooks 20 years ago, there was like 3 or 4 apps that integrated. There are hundreds of apps that now integrate directly with QuickBooks. And the versatility of QuickBooks Online and being able to manage it from your phone, to be able to manage it remotely, directly invoice a customer by simply clicking on your phone, to review your bank balances and everything is a key component of what makes QuickBooks Online so versatile. Again, QuickBooks Desktop does have some added benefits for you that I can go to in a little bit more detail. Let's see. Setting up a meeting next week. Sounds great. Awesome. I look forward to meeting you, Karen. At this point in time, it's really all I've got for you guys out there. I don't want to go too far. My next step is I do an advanced class at the end of the year relating to tax reporting. It specifically goes over everything that's required within QuickBooks to capture, accrue, and do the reporting. Again, having a great CPA on hand does help in these instances, but if you don't, I can certainly go ahead and walk you through the process of getting that set up. That class will be towards the end of the year in December, and then I do another tax class first week of April, I'm going to say, right before tax filings are due. So again, thank you for joining me for this class. Like I said, I look forward to setting up that meeting and reaching out to you next week. Just a general reminder, Karen, if you're not a client of the SBDC yet, please do sign up. It's completely free. It also enables us to work with you and provide you these services free of charge through the SBDC. With that said, unless anyone has any more questions, Karen, I will look forward to seeing you next week.
Thank you, Damon. Just a couple things that I wanted to touch on when we're wrapping up here. So just some upcoming events that we have going on at the SBDC. Number 1, we are having an open house for Cal Poly CIE's extension into North County. This will be our outreach office in Paso Robles at the Sandbox. It will be September 1st, which is next Wednesday from 5 to 7 p.m. There is a sign up on our Eventbrite that will follow this meeting. We also do have a coffee and conversation coming up, which is just a fun webinar, super casual Q&A with this time around will be the AngelCon winner from 2021, Tally4 Inc. You can register for that webinar for free on our website. And I think that is everything that I have. Damon, anything else?
Not from my side. Thank you so much for joining us today, Karen. And then I look forward to meeting you next week. Everyone have a great day.